Hi, thanks for watching today's video. I'm Brian, the Finance Ninja. I don't want to waste your time, so let's get to it. Oh boy, that stock market. I'm fine. No, really, I'm fine. Okay, a little warm, but fine. It's a tale of two markets right now. Shamawana joined the video so bad. Who am I to say no? If you like my cat, then smash that like button. It helps us out in the YouTube algorithm. These images I'll show today are a few days old, but the point remains. I mean, just look at the Dow. It hit a record high just a few days ago. Same goes for the S&P, and even the Russell 2000. But many people's personal portfolios aren't looking quite as good. Just look at Tesla. From a high of $880 in January to $589, a 33% decline. Or Palantir, a 50% decline since late January. ARK2, these are just massive declines in growth stocks. I mean, they're crashing. But why are they crashing? Let's discuss. First, growth stocks were the first ones to skyrocket coming out of the 2020 lows. And what a run they had. Believe it or not, Tesla was at $160 just 1 year ago. If you owned Tesla at the time, you are sitting on massive gains. Congrats. Palantir, you're sitting on a double just from last October. Not bad. Just a line on a chart does not tell us if a stock is overvalued or not though. So let's look at a couple other metrics. Tesla price per sales peaked at 25.49 at the turn of the year. That is massive. Forward PE of 175 at the turn of the year. Also crazy big. Tesla was overpriced by really any metric. Snowflake, price per sales of 157 on January 31st. Oh my God! Let's look at some Yardeni research graphs. They will help us to show this issue on a broader scale and are a really good tool for our valuations. Forward PEs on large caps haven't been this high since the dot-com bubble. The dot-com bubble. These are high valuations. Small caps are more reasonable. Now, this doesn't mean that every large cap is overvalued right now. This does not mean that every small cap is more moderately valued. This simply means that it will be easier to find a small cap of a decent valuation than a large cap right now. Mind you, there are still plenty of large caps that are good buys right now, but you just need to do more research to find them. Build your conviction. Research and conviction gives you results. So yes, part of the reason for the pullback in hypergrowth stocks since February has been due to valuations. People are transitioning to recovery stocks. That's just fundamentals. Things just got way too overheated. However, there's more at play here. A lot more. Let's see. Do you know why you can't find a PlayStation 5? No chips. This is causing massive supply issues. It's the year 2021. Why are there such massive shortages? The issue caused it. I don't want to be demonetized, so this condition that's been happening for the last year, I'm just going to reference as the issue. So yes, the issue caused these shortages. Shutdowns also caused production to freeze. Yet demand boomed. People were at home, they gotta buy things. And what's gonna happen when you wanna buy things and the factories aren't running? Shortages. It's just an unfortunate consequence. Automakers expected a bigger crash and cut production last year, so they have to place bigger orders this year. Thank you to the big three. And the juice themselves. You know, juice meaning stimulus, stimmies. Ford is cutting production 50% in Q2 due to the shortages. That is massive. What does Economics 101 teach you? When there is scarcity, prices go up. Cars are selling above their sticker price now. When's the last time you saw that? The price of lumber is up 250%. Average home prices have spiked $24,000 due to this spike in lumber alone. That is a huge increase in new home prices. It will devastate the real estate market. Consumer prices leapt 4.2%. So We can see the inflation right now. Producer prices jumped 6.2%. So why the spike in prices? It is scarcity and the Fed turning on the money printer during the issue last year. The Fed printed trillions of dollars out of thin air to keep the economy afloat. When there's more money, there's more inflation. It's not a surprise this happened. Among other things, one task for the Fed is to keep the economy from getting too hot or too cold. Too hot creates inflation and a bubble. Too cold is a recession or depression. So the Fed tries to keep the economy growing at a moderate pace, just a steady growth. And this attempt is to create what is called a Goldilocks economy. Another aspect of a Goldilocks economy is low inflation. So what happens when the Fed sees high inflation? They feel the need to break it. Their biggest hammer against inflation is to raise interest rates. Now, on to higher interest rates. What do? Interest rates increase the cost to borrow. You want to buy a new home? Well, your mortgage interest rate is going up. Corporate borrower rates increase, treasury yields increase, bond yields increase. Usually, interest on savings accounts increase, margin rates on your margin accounts increase. So if you've got margin out on stock, guess what? Your rates will probably be going up. What happens when the stock market is tanking and the bond market is increasing? Naturally, people sell stocks and buy bonds. The result, stocks go down more and bonds go up more. Then people sell more stock and buy more bonds. This feeding frenzy feeds itself. Growth stocks get especially hurt since their cash flows aren't going to show up until far into the future. So the stock price needs to be discounted more than others, and interest rates play into that discount. So what's the solution? The supply situations will work themselves out. They always do. This is a market economy. Inflation will taper when the supply issues fix and things normalize. Will the Fed raise rates? It's hard to predict right now, but I think they will wait a bit to see if inflation continues to go up. But I wouldn't be surprised if they raise rates 0.25%, maybe 0.5% over the next year. So right now, what you want to do is you want to buy stock in strong companies that will be far bigger than they are today at a fair valuation. And guess what? Since growth company stocks have plunged, you can get some great companies for a great price right now. So subscribe to this channel to find out which stocks to buy now. And then hold and wait for them to bear fruit. Diamond hands. Don't touch it, things will be fine. I hope you enjoyed today's video. Don't forget to smash that like button and subscribe. It helps us out in the YouTube algorithm. Thank you for watching, and I'll see you in the next one.